Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson, making professional trading simple. And you can see here that the market remains sideways. The Fed spoke today, but what's he going to do? Raise rates? Not yet. That's not going to happen yet. So these days are probably going to be, just ordinary, regular trading days for months to come when we have these Fed speech talks about whether the rates will go up, whether they go down. It was a heck of a lot more fun when rates weren't at zero because at least you had fun trying to guess. Is he going to raise the rates? Is he going to lower the rates? What's he going to do? What's he going to do? And the markets would actually react. Now it's like, well, no way he's going to do anything but leave them unchanged. So they're just becoming ordinary days in the markets now, which isn't any fun at all. But as it is, you can see that we're stuck back up here at top of resistance, very close to it anyway, 60 points away. Still fighting with this overhead line here. Every time we hit it, we get turned back. We hit it here, turn back, hit it here, turn back. Still struggling to get through the 10,500 mark, but we're spending a lot more time towards the top of this than we are moving our way downward. So for the time being, we have to remain neutral to bullish, especially coming into Christmas next week. God, it's hard to believe that Christmas is next week. I don't know about you guys, but it just doesn't. I don't know. It hasn't started to feel like Christmas yet. Even if you watch the little Rudolph things on TV with your kids, I don't know. It just doesn't quite feel like Christmas yet. But so coming into Christmas, I wouldn't expect that we would make any large, major moves. But I got to tell you, we've got to give the benefit of the doubt to the bulls. Whenever we see lighter volume, the markets tend to have moved up in the past on any type of lighter volume. We saw it all summer long, and I think we'll see it coming into December and Christmas as well. So keep your eyes open for that. We look at the daily. You can see us stuck right up here at the top of this range again, just putting in a little bit of a doji here, but not anything that would substantiate a major pullback. I mean, we're not even below the moving averages yet. Zoom that in a little bit. That's even. See if we can get a little bit more detail on what we're looking at here. There we go. It's much better. See, we're not even really fighting with the moving averages yet. Now the 20 hasn't been major support or resistance lately, so I'm not really counting on it to hold as we come down towards it. But you can see in the last few days, it's been just a really slow pullback. However, we've been able to touch overhead resistance a few times already. And like I said, with Christmas coming next week, we could see a little bit more of a float to the upside as we come into Christmas week. So be watching the 20. Maybe it will act as support. It hasn't done a very good job of it lately. But this would be the next level I'd be looking at, the 10,400 if you're a Dow player. NDX on a 60-minute, you can see it now bouncing off the top. 60 minutes starting to make somewhat of a more rational look to it from a charting perspective. You can see it caught right at the, what is that, about the 1800 area, 1797 area, right down in here, so 1795 area. Starting to put in a lot of support right there as we bounce sideways. Still looking to break the 1815 to move upwards. From a daily standpoint, straight sideways here. Lots of just goofy looking candles. None of them mean anything. Just watching for that break above 1815. On a weekly, this still looks like a high base. And look at the really, I mean, we're through Wednesday now. Look at the weekly candle. A low of 1793 and a high of 1814. So 21 points over the course of 3 days on the NASDAQ. No wonder the candle is barely visible. So such a slight, small trading range all week long. SPX on a 60-minute, coming back into these areas again, touching overhead at this time 1116 for a high. So it did try to break through the 1115, but notice how candles are having a real time closing above that 1115 mark on a 60-minute. We'll continue to watch that level. That's the level I've been preaching about for a long time. Yes, this candle is a gravestone doji, but it doesn't mean anything. Not in the context of it. It doesn't mean a topping candle at this point. We need a lot more confirmation before we have any feeling of that. If we get below 1100, okay, I might be convinced to look a little bit more towards the bearish side and a retrace back to the 1085 mark. But until that happens, I'm still watching for a break of that 1115 mark. SPX on a weekly, you can see it start to slowly trickle its way up too, just like the NASDAQ is doing. VIX on a daily now dropping below this area, which is we need to keep an eye on this. The fear is really starting to pour out of the market once again. I think it's just because of Christmas. Now, as we get closer to Christmas, I think we could see even more of the VIX drop and come right back down into these lower levels. Why not? With Christmas coming, there's usually not a whole lot of fear on anybody's part once you get close to Christmas. Afterwards, we'll see what happens. After Christmas, the last week of December and into the beginning of January should be a lot of fun to watch to see if we get any kind of a change in sentiment. Apple on a 60-minute. This is in and I don't have it drawn in, but this is a symmetrical triangle. You're looking